Let's get over to Kevin Green, a senior markets correspondent here on the Schwab Network, to help set up some of the action today. Let's talk about these tariffs. It's the latest. I mean, I feel like this is going to be an ongoing conversation. We started out yesterday. It was the tariffs around Canada and Mexico. Now there's a pin in that, or at least a bookmark, and we come back to that in 30 days. But now we've got China at the table. The U.S. instituted some tariffs. China immediately hitting back. What's your take so far, KG?
Yeah, this might be a little bit of a tit for tat here, and it's going to be a little bit different than what we saw for Canada and Mexico, because I believe the ask from the Trump administration is going to be a little bit more comprehensive when it comes to trying to slow down the flow of fentanyl, as well as the trade practices in general when it comes to China, which typically it does, ship out their deflation for the most part and puts pressure on prices for a lot of companies here in the United States. But yes, they did announce a 15% tariff on coal and natural gas. I think those are actually going to be very interesting. Coal, not so much. Obviously, we do still export coal. We don't utilize it that much in-house here when it comes to power generation. The only major countries that really still do import coal for power generation on a larger scale is China and India. But liquefied natural gas is going to be interesting because they are a big importer of liquefied natural gas. Now, if you're looking at it from a whole, there's still a lot of demand out there for LNG, especially when you're looking at Europe. And so that might be an area where a lot of these companies here in the United States, like a Cheniere, may just redivert or do longer, bigger deals with the EU rather than maybe sending it out to China. But a lot smaller scale when you're looking at the tariffs. But once again, experts do believe that it's going to be a little bit more of a back and forth when it comes to China. And they're still in their Lunar New Year, right? So we will, they get out of that in Wednesday. So we'll probably hear a lot more commentary coming from them. And they are actually challenging some of these tariffs because they do believe that it goes against the World Trade Organization, rules that we all try to abide by. So there might be also a legal battle that's brewing up here as well.
You could certainly see that. And then, in the context, the broader context of the tariff conversation, I know I started this with, essentially we've got 30 days to come back to the Canada-Mexico tariffs, or the impact of that. Is that how you see that as well, KG?
Yeah, and we probably will see, the can getting kicked down the road too, right? I mean, we had the initial impact here. Obviously, there was a big outcry here in the United States as well as in Canada and Mexico, and right now we're kind of cooling off when it comes to some of those tensions. And so 30 days from now, we'll see if anything does materially change. What's actually very interesting, though, a lot of those measures that Canada announced yesterday were also things that they announced in December of last year. So I'm not sure if we got major wins, to say the least here. I mean, if you're talking about 10% or even 15% of their overall troop fleet going to protect the border, around 15,000, if I'm not mistaken. That's a little bit different. But outside of that, a lot of the measures that they did announce yesterday were already in the works or being planned out. So once again, I think if China becomes a bigger issue, probably the Trump administration will probably kick the can down the road a little bit more when it comes to Mexico and Canada.
And then does the market reaction so far today make sense to you in terms of what we're seeing with choppy action in response to the latest tariffs, the retaliatory tariffs from China?
Yeah, I think we were expecting this, and you can kind of see, saw on the horizon that they weren't really engaging with the administration as aggressively or having a lot of commentary around these tariffs. And once again, that could be related to the holiday as well. And when you're kind of looking at it, 15% tariffs on LNG and coal is, it's a thing, but it's not going to really make a huge adjustment. We also have to keep in mind, too, China is still having some issues when it comes to trying to spark growth. So a lot of their consumption when it comes to energy just has been kind of lackluster, to say the least. So it may not actually have a major impact on China for right now until they actually do see the stimulus measures kind of taking place. Now, when you're looking at a 10% higher duties when it comes to agricultural, crude oil, we did see crude kind of slide to the downside here, and machinery and cars and trucks. The agricultural side will be interesting. So keep your eye out on Caterpillar and John Deere. I mean, they have been able to see a couple of tailwinds when it comes to product sales over the last couple of quarters here because there were gluts, and now they're kind of getting out of that. The inventory has been kind of pushed down, if you will, and tightened up a little bit, but they could be impacted by this. So the industrial sector is something to be mindful of today.
Definitely something to be mindful of. Caterpillar pretty flat year to date. Let's talk a little bit about some of the other earnings that we have to get into today. Spotify looks like it'll be higher based on its latest results. Did better than expected. Can you take us through some of the details there, KG?
Yeah, we're seeing the shares up around 8% or so in the pre-market trading here. They did beat both on the top and bottom line. The premium revenue is actually very surprising here. That came in at 17% on a year-over-year basis, and their average revenue per user also exceeded the street's expectations. When you're looking at the ad-supported tier, that actually grew around 7% on a year-over-year basis when you're looking at the revenue, and then monthly active users, that came in at 675 million. The street was looking for 665 million, so a decent beat there. So across the board, what you're kind of looking at is the fact that they actually have pricing power. They're able to push margins up to the upside. The adoption rates are getting a lot better, or the trajectory is still increasing to the upside here. And the ability, their ability to kind of cut expenses over the last year and a half has also given them the ability to kind of right-size their business a little bit. So this is a company that has done a phenomenal job and continues to do so. And you're seeing it with the stock price bumping higher here today.
Yeah, first full year of profitability there for Spotify. And then PayPal, it's released its latest numbers. Looks like it's under some pressure in the pre-market. What are the details?
Yeah, so if you're looking at PayPal and what they reported, for the most part, everything was actually pretty good. Non-GAAP earnings came in at $1.19, beating the expectations by around 7 cents here. And when you're looking at transaction margins, that came in at around $3.9 billion, an increase of around 7% on a year-over-year basis. Now, if you're going to nitpick here, it's really the payment transactions per active account. That came in at around 3% growth on a year-over-year basis. And when you're looking at some of the margins when it comes to the payment activity, that came in a little bit lower than the street's expectations. Their guidance moving forward is going to be something that's going to be scrutinized. I mean, this business has been doing really well compared to a lot of its peers. The bar was actually fairly high. They will have their conference call, which is actually started right now. So maybe they're going to get a little bit more commentary as to why they believe margins might be contracting just a tad bit in the next quarter here. But headline, they actually did pretty well. But when you look under the hood, once again, take rates, that came in at 1.9%, a little bit lower than the street's expectations. So it's just some of the minutia within their report that may have created a little bit of a sell-off here today.
All right, Kevin Green, Senior Markets Correspondent, thanks a ton for setting up the day for us.